exceptions, and you fit within the gift tax exclusions.
Okay. Maybe just briefly, well, let's see, let's go ahead along this, because probably most people are dealing with family issues. How might people be surprised with the administration over the life of an estate or trust related to this change of ownership stuff?
Well, one of the things that can happen is that you could have a change of beneficiaries in the course of administration, because you can give a child the life income right under a trust, and that qualifies. That's a qualifying interest. So that would be qualified for a parent-child. But now the child dies, and that distribution goes, that child's interest goes to another child. Well, that transfers child to child. It's not coming from parent to child. It's going somewhere else. That can trigger reassessment. There was a big case last year down in Southern California where it was a shopping center that was worth, maybe $100 million. It was huge money. And that parent, the income beneficiaries passed on, and that right went to, I think, the cousins. Bingo. That got the whole property reassessed.
And now you're required within 60 days or whatever to get a report in and tell them.
Yeah, you got to let them know. And if you just let it, that would have happened, at the trust level, and not necessarily there wouldn't have been a deed or anything that would have let the assessor know. So that trustee of that trust had to report that, and that would have triggered the reassessment.
Okay. Go ahead.
On the reporting requirement, this is one thing I see missed a lot. Because it may not happen right away. If someone dies, especially in a trust administration, you don't normally do the deeds right away. You may sit on it for 6 months, a year before you actually do something with that property. You are required to file a notice of death of property owner with the assessor's office, and any applicable exclusions as soon as within, I think, 45 days of someone's death. It's fairly quick. And we routinely do that, and that could trigger the reassessment right there, because the assessor has the right to look at the will or the trust and say, okay, that interest is going here. As soon as that person died, technically when someone dies, title passes as soon as they die. Even though there's not a deed recorded, they can reassess it right then and there and start that process and issue their reassessment based on the current market values.
And I've seen, and now this is more historic, so I haven't seen this just recently, but many cases attorneys sort of postpone because they're waiting to get things settled, and so they may postpone filing some of this paperwork. And so, especially like if you're an executor or a trustee, you need to be aware that you have a fiduciary responsibility to get these reports filed. And unfortunately, you may not know.
Well, sometimes you don't know, but you do have that obligation. That can make it even scarier. Not only do you have an obligation to do the paperwork, you're actually liable for the tax too.
Oh boy.
Until the transfer is actually made. And so if for some reason they can't squeeze the tax out of somebody else, they can come after you personally. So an independent trustee wants to absolutely make sure they do these.
Right. So we talked a little bit around the business issues, but for people who have family businesses or closely held businesses where they have real estate in them, this can be an issue as well.
Oh yes, the real estate. We try to get people, and they don't particularly want to do it, but most of the time they'll listen to us. We try to encapsulate every piece of real estate in its own little entity, its own little LLC usually, so that we can be absolutely sure. Because you could have have real estate stuck in a corporation, and all of a sudden your corporate ownership changes, as you mentioned earlier, and wham, you've got a reassessment of all that corporation's real estate if there's a more than 50% change in the shareholders, and that can happen.
And when you're planning to sell a business, this, again, if it's got real estate in it, people may not have thought about this as far as what can be a result related to this change.
Yeah, I think certainly most sophisticated, folks, are aware of the property tax issues, and will try to work around it, but they not all. Sometimes there's just nothing you can do about it. And you are going to get a reassessment. And you have to factor that into your business thinking.
Right. And now there's a box on the form for a partnership tax return or a corporate tax return. And so it asks, has there been a change of ownership related to this? And you're supposed to go back to whenever, this thing started, whatever, or the last change of ownership, I guess we should say. And if there has been, you check that box. And then that creates a process, as I understand it, of communication.
That's part of the new enhanced communication is now that the franchise tax board is going to have that box check. It's going to get it back to the assessor so that these things won't slip through the cracks. And that's new. The good news is I don't file partnership returns or corporate tax returns.
I do.
I know you do. And just, just because when we get involved in doing this, I always want to have the CPA there, at the beginning. So she knows exactly what's going on. Because, we as lawyers tend to get involved for a period of time, clear the titles up and get done. You get to live with it for the next 15, 20 years.
That's right. Okay. Let's say that you own some real estate and you get some sort of a letter from the county assessor's office. What should you do?
You need to react quickly. Don't put that in the to-do pile, or I'll talk to it with my accountant next April. If you get one of those, any kind of letter from the assessor's office and you don't understand it, you can call the assessor's office. Believe it or not, they're very helpful on the phone.
If you can get through to them.
Yeah, well, go down the street, go see him, go say hi to Larry here in Santa Clara County. Get to them, find out. If not, you need to get to an estate planning lawyer, or more than likely an estate planning lawyer, because I think we're the ones that deal with this more than anybody does, the property tax issues, who can tell you what it means. Because all of a sudden, if you have one of these escape assessment bills, and I've seen these escape assessment bills, and they're really hard to understand. They're just really peculiarly laid out, and those are big numbers. And you have a very short period of time, because not only can you have, the tax reassessed, that tax is based on what the assessor thinks the property value is, and that could be wrong too. And you may need to assess, yes, I'm stuck for part of it, but by the way, you've overvalued the property by 30%. And that's another discussion to have with the assessor's office to make sure that they've assessed the right value. So you need to get to somebody who knows this area of the law.
Okay. We're about out of time. Any final words of wisdom related to this whole area of change of ownership?
This is really careful. Be careful in this area. A lot of people try to do a lot of self-help. This is one area that's just fraught with danger. Get to a tax professional who knows this area of the law. I don't claim to know a lot of tax issues, but this is one area that we do and I actually have one of my partners does almost nothing but property tax work. If I don't know it, she's there to help.
Oh, that's great. Okay, folks. So pay attention to this change of ownership issue. Hopefully we brought some things to your attention, again, for further discussion. And I hope you can join us next time on Financial Insider Weekly.